Good evening, according to my time. Okay, so you're welcome once again to my channel, and I'm here to share with you a few things prior to yesterday's video that I posted, which was on the swing trading analysis that I made. That video, if you haven't watched it, I think you should go and watch and gather the information I've shared in there. Um, they are very good materials that I shared in there, and I believe that you will be so much blessed to watch those videos and materials, learn and glean whatever you're supposed to glean from the video, and it will help you make some. I call it $1,000 idea. I had it for free from my mentor Michael, and then I'm also privileged to share the little that I've learned from him for the past couple of years. He has been so much of a blessing to me, and because of his free materials, some of us have got to where we are now. So I'm really grateful to him for all that he's done. I greatly appreciate his effort. All right, so quickly we'll go to the chat, and then so yes, Michael, thank you once again. I always mention your name in my videos because you are so much. You mean a lot to me, Michael Hedelson. All right, so let's go to today's video, and then just a quick one. This is volatility 75. Okay, so let's just do a quick review of what happened within the week and see the way forward for the week ahead. Okay, all right, so what happened within the week? So let me put the chart here. What do you see? What can you deduce from the chart? Just 30 seconds. If I've given you this chart, to just put a few annotations on the chart, what will you say, or what will you put for this week? So assuming this is the week in perspective, okay, what will you put? Which annotation will you put on the chart? Okay, good. I know you've seen a whole lot of information in there. All right, so quickly let me also quickly go through the chart with you and show you a few things that I saw during the week that price actually grabbed. Okay, so first of all, spanning from the beginning of the week, there was this on the H4, the 4-hour time frame, there was this fair value gap here, or there's an imbalance here. So quickly, this is an FVG. Okay, this is an FVG. Okay, sorry, there are some equal. There's some equal highs in here. Beyond the fact that there was an FVG, price formed some equal highs in here. Okay, so let me expand it so that you can see what's happening. There was some equal highs here. This is the FVG, then this is the equal highs. Okay, so we have this equal high, sorry, equal high. So let me quickly so this is how you begin to actually become a very professional, whatever, become more professional at what you do. You don't just do things, but you begin to even put annotations on your chart. Okay, that you are even more clear and concise about what you are doing. Okay, these are the equal highs here, sorry, this side and then this side. Okay, so these are the two equal highs. What did price do? Price came to rate the equal highs, which means that it was a very good point to even have taken note if you were trading. Okay, and then what next did we see? I think I've seen another fair value gap down here. Sorry. Okay. Okay, there's this fair value gap down here. All right, that price also came into to take. All right, so price came to the down this lows, and then yes, there was still some more FVJs. Price came in here to still close down on this FVG here. Price traded up. There was some sort of up movement here. Then there was this fair value gap which was also closed in here. Price traded back, came down to this point, traded up, and then we go on and we go on. But nicely, I want to show you something. Okay, so this is equal highs. What does equal highs represent? Equal highs represent a level that the retail mindset says that there are this is a resistance level, so they begin to frame their sell around this area, and immediately price breaks this high, they say price has broken, so they begin to frame their buy, and price rallies now go straight against them, and then they're out of the market. Okay, so that is it. All right, that is basically it. All right, so now let's see. So that's what we mean by equal highs. When you see equal highs, always expect that price will come to read it. Okay, so when these two highs were formed, price traded down slightly, and then what happened? It came back quickly to just get rid of, and then it closed down on this fair value gap. Okay, so let me quickly show you this. You remember last week I posted a video showing you that there was some sort of breaker forming and all that. Okay, so it was within this week, okay, which spanned from the previous week. I'll show you that the fair value gap also was traded, and then this fair value gap which shows a resistance price trying to push away from. Anytime you see, let me give you one trick. Anytime you see that there's a fair value gap, price goes and being is bounced back, price goes there the second time and is bounced back, always expect that price would go and rather fulfill other, for instance, so this when price got bounced back off here, you know, there was this FVG. So not naturally what your expectation should be is that price should come in and fill in on this the fair value gap below, because price had already began going into, so expect that price will close in on this fair value gap before it goes back to read that fair value gap above here. So take note of this area. Okay, take note of this area. Actually, price, let me bring this. You see where price actually reversed. It was actually on this particular candle, which was showing that this candle acted in as more of like an order block to push price up. Okay, I always tell you that ignore the wicks. Okay, all right, so basically that's what happened here. So price quickly traded into that FVG. All right, let's not really take our focus there now. So within the week, that was what was actually transpiring. Price closing down this FVG, came back to close down on this FVG, and went up all this way to take down a short-term low which was within last week, which was within last 2 weeks, sorry. Okay, so you can clearly see that price actually went down to take down this high here. Price actually went to take down this high, and then it traded above it, and then it broke down towards this direction. Okay, so the previous week on volatility 75, this was what actually market was doing. Okay, now let me show you another important thing that really happened. The setup that I gave concerning the breaker. Okay, yeah, so let me take everything from the chart and then show you what actually transpired. This was the area that I told you the price, I was looking at this as the breaker, this particular bullish top candle as the breaker. Okay, but price actually traded and came down all the way into the second bullish candle and even came down a little. Okay, traded into it further down before it rallied up and took down the high where I was expecting to take profit. Okay, now let me quickly go to the chart. For instance, we had this market trading on especially this is in a bullish scenario. Okay, this is in a bullish market scenario where we have short-term lows and short-term highs. Okay, so for instance, we are in a bullish market and we have this scenario showing us that we have market rally down this way. Okay, and then it forms another short-term um short-term high, and then it breaks below that short-term what's the name, short-term low that it formed here. Okay, in a bullish scenario, and the market tries to trade back, and then when it trades back into this zone or this area, for instance, you could see that it was into the mean threshold of this bullish candle here. So when it trades back into this area and it gets bounced off, now hear me, price trades form a short-term low, goes up to form a short-term high. It breaks the short-term low, it tries coming up again to go and take the short-term low, but it's unable and it fails and it returns. Price continues to push up. Now it breaks that short-term high. What we normally expect is price should retrace into, normally price would more often retrace into the first bullish order block, the fully, so not the order block, into this first bullish candle which was formed in that short-term high. The first short-term high that was formed, is a high. We are in a bullish scenario, so we are looking at the first short-term high that was formed. Market usually trades into that. Usually it comes down even to the bottom. Okay, and we expect price to rally back up and take down this high. But here is the scenario that price actually went down even further into where we had this the second bullish candle. And as I always told you, with volatility and synthetic index, always wait for the closing of the candle so that you know precisely if the market is going to actually play according to your tune. Now, why did the candle drop this further? There was this area of fair value gap here that price had to close in. So you realize that when price closed in, it was very sharp. When price closed in on this area, it was a very sharp movement. Okay, sorry, when price closed in on this area, it was a very sharp movement. Let me quickly go back for you to see the area that I'm making inference to. So you could see it was a very sharp movement. It was a bounce back. So you could see that price was back into that range, and then what did it do? Price began to trade and it took down the high. I always say that this is the level which we take profit. Always take profit on the body. So when price go here, this is where you take your profit, and you are good to go. Okay, so basically this was what I did. I posted earlier about the breaker. Okay, so price, this was where we were supposed to take profit. Don't expect price to shoot and go. Because of greed, we are always not making it on the forex market. We are always not getting what we are supposed to get because we expect markets to do what we want it to do rather than what market is actually supposed to do. Okay, so that is what happened, especially with the breaker formation and with this movement from this side to this place. Okay, and taking down this high. All right, now let me quickly continue. So for instance, another premise that you should have also seen in the market was this. Market was forming highs and it showed us the market was trending upwards. Okay, market was trending upwards. Okay, market forms low and forms highs. It forms lows and it forms highs. And then what happens? And all of a sudden, we have a break in that particular structure that the market was trying to um, build. Okay, the market was trying to build up short-term, was trying to build some short-term highs and lows, and then it was broken. When price got broken here, so here this is the same scenario that applies when we are looking at the long-term positions. Okay, so for instance, this was the area of trade where market structure got broken. Okay, this is the area. So we saw that market was trending upwards, forming higher highs, and then it was forming higher lows. Okay, so we're moving in the upward direction. Then suddenly the structure is broken. So we had a BMS on this side. Price trades down, takes down the low. So price actually took down the lows and came to close in on the fair value gap area that we had here. Okay, price came down and closed in on the fair value gap. So this was the fair value gap, this area of price that has not been traded. This was it. Okay, so price came down and took down the area. Price came in, took down the fair value gap. This is what, and then price came down, closed below the fair value gap and came down to this area, and then it rallied back up. Now, as price rallied back up, what were you seeing within the week? We are looking at the context of this week, the premise of last week. This just this week over here. This is the premise within which we are looking at. Okay, this is the premise within which we are not going beyond that. Now, price breaks structure here. Okay, then what next? I told you yesterday that price, when it breaks structure, it would automatically retrace back into the area where it had broken the structure. To fulfill every single fulfillment it needs to fulfill up here, if there are any area of liquidity that will help price even run down further. So price actually came down and then it rallied back up, came down to this point and rallied back up. Now my point is, at what point did price even retrace or reverse at this point? What actually give the or inform the market to reverse at this point? Let me quickly bring my so let's see what actually informed price to reverse at this point. Okay, we'll get to know that sooner. What actually informed price to reverse at this point? Okay, someone says that is the mean threshold of this particular order block here, this bearish order block on the 4-hour time frame. Okay, fine, but why didn't it reverse on this particular point, but it came down towards this direction? Okay, so we'll look at it on a bigger time frame, but then let me explain what I was explaining. If we are in a bearish market, price breaks structure and retraces back, at what point necessarily might you even expect it to, so that you have to pick price at the very tops? Okay, so now let's look at prior to the breaking of the structure. Okay, prior to the breaking of the structure, which is this area, price traded from this area, came down to this point, and then what happened here? Price broke the structure. So prior to the breaking of the structure, what did we see? We saw there was an area where the institutional buyers came in. Okay, yes, sorry, institutional sellers. When you see candles portraying themselves this way, you may think that, oh, these are candles which shows that institutions are actually what's the name, are going to buy because it's approaching a resistance level. No, so rather this is where they are hedging their funds, they are preparing to sell. Okay, so you see the market pushes up a little, this is where they enter the market. Now you see price breaks a little bit above it. the 4-hour time frame breaks above it. So quickly, this will inform you that you have to go down to the 1-hour time frame. Probably there might be some liquidity areas above that is informing the market to push a little bit above. So quickly, you go down to the 1-hour time frame. Okay, so quickly you go to the 1-hour time frame. When you go to the 1-hour time frame, what can you also see? Now here we had price moving, and then it was doing something, and then look at this area prior to the breaking down of this structure. Prior to the breaking down of this structure, let me refine it well. Before the wicks, now let me show you more information. Pay attention to this. I'm putting the line just before the wick, just on top of the body. Now look at this. Every candle that had its body within or below the body of the original short-term low, if price had penetrated or traded above it, ignore it. Consider the bullish candle that comes before the bodies of the candle, before the close, before the breaking of the structure. So this bullish candle here is what I'll consider. So I take this bullish candle as a point of entry. So I consider this point as a point where the institutional buyers actually began to place their orders. Can you see what I'm showing you? This level is where institutional orders began to place their orders. So you see that price got here and then it got bounced off. So this is the area where you could have easily placed your trade. This was an area where you could have easily placed your trade. Your trade could have just been at the mean threshold of this particular candle. This, you take the whole volume, including the wicks. So your entry could have been just anywhere on this, in the mean threshold. You could have picked it from the top also, which is not anything. Just having that notion that, okay, let me give room. You always consider the mean threshold. Okay. So basically, this is where you could have entered your trade for this particular sell. Now, if you had entered this trade and you're expecting it to sell, my question is, so where are you expecting the market to sell towards? Okay, so where do you even plan your exit? Number one, we have a lot of areas where you can exit. You can exit here below this lows. It could have been one of your areas of exit. 2, closing in on this gap here could have been one of the areas of your exit. You don't need to have some wild guess area where, oh, I'm expecting price to come down close below this, and oh no. This is a very nice trade that you could have taken, exited here, as simple as that. Because immediately price closes in on this fair value gap here, we expect it to, whatever it wants to do. Okay, so this is basically what happened within the week. Now look at this area where we are. So let me go back to our 4-hour time frame so that we are more precise. Taking your profit here, you entered somewhere around this area, you're taking your profit here, you are done. Now we have another area where we are expecting price to also do some wonders. Now, what is my premise for this week? My premise for this week is that if price doesn't break below this level, I'm expecting us to have a bullish week. And I'm expecting price to actually bounce off on this bearish candle here, which is my entry as my bearish order block. Okay, now let me go to the monthly time frame and explain why price came to this level on the daily time frame, why price came to this level and got bounced off into the sky. All right, so as I explained yesterday in the video, in the long-term trade video, I was showing you that this is an order block. This particular area is a whole order block. Now I ask you, which other block is found trading into the other block we had here, which is this particular candle, which is this bearish candle. This bearish candle actually traded into this other block, and its price was propelled to shoot up further. So now this also becomes another other block. So pay attention. You will notice that this area where we said the 4-hour time frame was reversed is actually the area where price actually touched this other block. Price touched, sorry, let me adjust my line well. Price actually touched this other block, which is a propelling other block. So when immediately it touched it, what did we see? We saw price rally away, and it came all the way this way. So here, this is the premise for price actually being bounced off on the 4-hour time frame. So for instance, this I remember I sent to one of my guys on my WhatsApp platform that I just indicated it this way, that I just did something like this for him, and I just told Sabil. Sabil was like, "What am I supposed to do?" I was somewhere here, and I told him price is going to do this, and then it will do this, and he was so much marveled at what I was actually showing him. But you know, it is not magic. These are just simple trade premises that actually always suffice in the market. Okay, so guys, this was actually what was transpiring within the week. Now we've entered a new week. What is price began to do? Price is beginning closing in on the fair value gap. We had one here, price has already closed in. We had another one here, price has already closed in. Now let me go down to the 1 hour time frame. Can you see another fair value? I can see some small fair value gap here. Okay, that I'm expecting price to close in on. All right, this is where I'm expecting price, and also price comes down a little bit further, either to touch this other block, and I'm expecting a push up into the sky. All right, I'm expecting price to come down, touch this other block, trade into this wick, touch this other block, this is it, and then I want to see a push up. Okay, so I'm seeing that price has been trending down, and price breaks a structure here and it begins to trade down. So this is also on the 1 hour time frame. You can see it on a different picture. So you see, guys, the picture is always clear. I can see different picture when I watch this chart. Should I show you another picture? All right, so watch this. So I could see that for the past 2 weeks, price was actually accumulating, and then it broke down. This was the false move. Okay, you remember I showed you the power of three. I shared with you accumulation, distribution, accumulation, manipulation, and distribution. You can watch that video too. This is how it works. Price accumulated, and then it just manipulates. People feel, oh, it's going to sell. It's broken out of this area. It's going to sell. They begin to place their sell orders, and then it comes back, trade into this other block, and boom, goes down to take up these highs. Okay, so let's watch what the market has for us this week. I hope you have a successful trading this week. I'll try my possible best to give you more update. Okay, so stay tuned, and then I'll give you more updates on volatility 25, volatility 50, step index, volatility 100 as well. All right, so I wish you all the best. If today is your first time watching my videos, I want you to subscribe to my channel, and then enjoy today's lessons. And then I hope you learned something from today. If you have any question, put on the comment section. I have a WhatsApp group. It's a closed group anyway, so I have a Telegram group that you can join. All right, so I wish you all the best. Have the best of the day. All right.